Hi everyone, thanks for checking in again. It's Adam here at Low & Co Realty, and we're looking at the Wellington real estate market for the month of April 2026, comparing to the last couple of years, seeing what trends we can identify. Folks, Wellington values have hit a new low in April since the peak. That's Wellington region. Now, interestingly, Wellington city is not quite at the lowest point it's been at since the peak in late 2021. However, the theme I'm going to sort of keep coming back to throughout this update video is a market that is stable. We have been heading towards stability, and we are fairly much in a stable market. So values are low, but overall the market is stable. So I'm hoping that gives both buyers and sellers confidence that we're through these periods of these wild swings in the market, both in terms of supply coming to the market, number of sales taking place, and price movements. So overall, I would say that's a good thing, to be in a balanced, stable type of market. Message to sellers is that yes, while prices are kind of at a low point, the fundamentals have stabilised now, so that's good. The message for buyers is there still remains a lot of choice out there, so make the most of these conditions while they last. So let's get into the detail. Median sale price, 765,000 versus just over 771,000 a year ago. So that's pretty much flat, down less than 1%. Since middle of 2022. So that is approaching 4 years now. I've been saying that median sale prices have broadly stabilised, or the big drops are over, and you can see that clearly in the graph there. That red line shows the trend. Now bear in mind the red line is a 6-month moving average, so there's a little bit of a lag before that trend shows up in the red line there. But nonetheless, the trend is instructive. We have been going broadly sideways for a very long time, definitely over 3 years, approaching 4 years now really. We've seen little ups, little downs in median sale price, and over the last 2 years it has been very, 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 very slowly downwards. But the macro trend has been broadly sideways. Certainly for sure, the big drops are behind us. So that's pointing to a market of reasonably stable median prices. Best guide, however, to underlying values is the Real Estate Institute House Price Index. So let's look at that now. This is what I'm calling the league tables, and Wellington, no question about it, still has fallen further since the peak than any other part of the country. However, again, returning to that same theme of stability, down 27% in April, which is the biggest number, the biggest drop we've seen since then. Sorry, did I say since April? In April, since late 2021, of course I mean. But that number has been going between 25% down and 27% down for, again, well over 3 years. So broadly, this is pointing to a pretty darned stable market in terms of underlying nominal values. Over the last year, Wellington and Auckland kind of leading the race. It really is there's a different market between the cities and the provinces. There's also a different market between the South Island and the North Island. Wellington and Auckland, the weakest markets generally, and over the last year, that's no exception. The numbers, of course, are pretty small, way smaller than the big drops we saw several years ago. 2.5% down for Wellington, 2.8% down for Auckland. And over the last 3 months, you'll see the numbers are really hovering around zero. So I think broadly speaking, we've got a bunch of regions with slight positive numbers, a bunch of regions with small negative numbers. Overall, again, going sideways. This is a relatively stable market, and Wellington's no exception. So if we look at the graph here for Wellington Region House Price Index, going back some time, we saw really huge deviations from the x-axis there. Massive increases, big decreases, quite an increase again. So moving from huge variability in the market to much more consistently narrowing variability in the market. So of course what that means is stability. So we had real instability 2022, 3, 2024. Since then, and in particular over about the last 15 months or so, the variance in underlying values has been operating within a really tight range around zero. So again, a consistent theme here, a pretty stable market over the last year or so in Wellington. Let's look now at new listings. So 623 in April versus 630 a year ago, 779 2 years ago. So pretty similar to 12 months ago, and a big decrease compared to 2 years ago, sorry. So obviously as a seller, what you want to see is fewer new listings coming to the market. That makes it easier to compete for the attention of the buyers. So compared to 2 years ago, a much better picture, 20% fewer new listings coming to market, but broadly the same as 12 months ago. So again, relative stability. Again, look at that red line there. That's showing the average, the moving average over a 6-month basis. Typically, we see 600 to 800 new listings coming to the market in Wellington in a month. We were operating in that range consistently between 2015 and 2019. 2020, COVID year, it dipped down below. Then it bounced up again in 2021. Saw some big increases, and then the big change was big falling away of volumes. So a real drop in volumes in 2022 into 2023, and then heading into the elections. After the election, we saw the volumes increasing again. So big dip in what would be a typical volume in that 2023, late 2022 sort of area. But then since the last 2 years or so, we have again been operating in that relative normal range of 600 to 800 for the last 2 years. So again, relative normality in terms of listings coming to market, relative stability over the last couple of years. And interestingly, in April, 623 new listings. The long-term average for April is 622. So absolutely typical volumes of listings coming to the market in Wellington in the month of April. When we compare to 12 months prior, again, you can see that enormous variability showing through there, big deviations from the horizontal axis there. But again, in the last year or so, much more operating in a much tighter, narrow band around the zero mark, which again reinforces the consistent theme of a market that is now pretty stable. What about number of sales? Again, look at that red line. Traditionally, we're going between, again, 600 and 800 sales in the month. We were operating consistently in that band until about sort of middle of 2021, where sales volumes really started falling away when buyers sort of sensed, no, this is too much, and they started really stepping back. Number of sales started really nosediving and went down to really very low levels. 2022, 2023, these were very tough years for real estate agents, very tough years for sellers. From 2023, we saw consistent, albeit gradual, not booming by any stretch, but gradual, consistent increases in the number of sales taking place. Then for about the last 2 years, since middle of 2024, we've seen sales taking place around about that 600, between 600 and 650 sales a month on average, on a 6-month moving average basis. And it has been in that sort of region for the last 2 years. So again, this is a market demonstrating stability. 620 sales in April this year versus 652 a year ago and 609 2 years ago. A bit higher than 2 years ago, a bit lower than 1 year ago, and on a 6-month moving average basis, 613 versus 647 a year ago. So that's 5% down, a bit of variation there. And 591 2 years ago, so 4% up versus 2 years ago. So broadly speaking, again, a market that's demonstrating stability. And once again, just like the number of new sales, new listings coming to market, the number of sales we saw in April was absolutely spot on average for what we see in the month of April. So 620 in April versus a long-term average of 625. So new listings coming to market, number of sales taking place, absolutely bang on average. So this is what a normal, typical April looks like in that respect, at least. Again, if we compare number of sales to what we saw 12 months prior. Again, we see big variation from the norm, big swings above the x-axis, big swings below the x-axis there. But again, we've been moving from sort of 4 years ago at very wide variability to much more narrow variability over the last 6 months or so. So again, this points to a market that is broadly stable. How long is it taking to sell? It is still quite a long time, 45 days in April and exactly 45 days also in March. Now, January and February were significantly longer at over 60 days and 60 days respectively. So again, if you look at the overall trend, which of course is the red line there, you can see that over the last 3 years, after we saw this huge drop off in days to sell, it has been sort of consistently increasing. Over the last 6 or 8 months, on average, it has been bouncing around that 50 or late 40s in terms of number of days to sell. So at 45, it's certainly longer than your typical duration to sell in April, which is 37. So it's still considerably longer than average, but it's way down compared to the peaks we saw in January and February, down on sort of what we typically saw in the middle of sort of 2025, sort of a yearish ago, and way down off the peaks we saw in the really tough markets of 2022, 2023. So longer than average, but in the last 6 months or so, broadly stable once again. Inventory, we have seen in the last couple of months inventory levels increasing. So we were operating for roughly 2 years, maybe not quite 2 years, at around 15 weeks worth of inventory, which interestingly is exactly the long-term average. So again, that is what you would typically expect to see in Wellington, about 15 weeks worth of inventory. Just the last couple of months, March and April, we have seen that consistently increasing away from that 15-week mark, and in April, 18.8 weeks. Certainly quite a bit longer than we saw, quite a bit more inventory than we saw in April last year, 36% more and 45% more than 2 years ago. So certainly those last 2 months we have seen an increase in the amount of inventory on the market. So it'll be interesting to see if that trend does indeed continue. That is one bit of data that is not suggesting a stable market. That is suggesting a market that is weakening. So let's see what happens with that one. And on the Trade Me side of things, obviously, gross number of listings on the market is quite seasonal. So, in the springtime, we see a swelling of supply. In Christmas and New Year, that shrinks again, and then in summer it swells again. As we head into winter, it declines. And so obviously in May, we're starting to head into winter, and we've seen a drop off there. So 3,414 on the market versus 3,251 a year ago, and 3,014 2 years ago. So 5% more than a year ago, 13% more than 2 years ago. But again, if you look at that red line, what you can see there is these massive increases as we came off the boom, as we headed into 2022, that really tough spell in the market. 2023 remained elevated, then it came down a bit as we went into the election, and then after the election we saw swelling volumes again. Over the last 12 months, if you stripped out this seasonal variability, again you'll see those supply volumes are hanging around, a bit above, a bit below, according to the seasons, but around 3,000. So it is quite a high level of stock, but it's a stable level of stock. So again, this is a market of relative stability. And if you see, again, you compare it with this other graph, comparing it to 12 months prior, you see these enormous variations in amount of supply on the market, massive increases in 2022, heading into 2023, then 2023, a reduction in the amount of supply on the market, then an increase again. And the last 6, 8, 9 months, we've seen again that red line has basically been skimming along the x-axis there, which basically means it's the same as last year. Again, a stable market. So whilst there's a lot of commentary out there saying that the market is tough, it's a buyer's market, and I'm not disagreeing with that, but I think the hardest thing for buyers and for sellers to deal with, and for real estate agents, to be fair, to deal with, is a market that is changing dramatically, that is changing rapidly, and those days are now behind us. We are now in a relatively stable market, folks, in my opinion. And so hopefully that gives both buyers and sellers the confidence that they can enter the market and transact safely. So in summary, folks, values broadly stable, and they have been for some years now. A very small drop over the last 12 months in Wellington. New listings have been stable recently and bang on April norms. Sales volumes also stable and also bang on April norms. Inventory levels above long-term levels for the first time in the last couple of months. For about a year or so prior to that, we were really quite stable. Duration to sell remains quite long in terms of much longer than what is typical, 45 days versus 37, but 45 days is significantly fewer days, shorter periods of duration to sell than we saw in January and February, and certainly shorter than we saw sort of in the peaks a year ago, 2 years ago, sort of thing. Trade listings slightly up, but heading down now as we head into winter, and broadly over the last 6 or 8 months, we're seeing trade volumes very, very similar to what we saw 12 months prior. So again, a market that has broadly stabilised. So message to sellers, overall fundamentals are pretty stable. Prices are still weak. Of course, that is not changing much, but what we do have now is a market that is broadly stable in most metrics if we look at them. Buyers the message continues to be there is still a ton of choice out there. Please get in amongst it if you are looking to buy and you can afford it. A big thanks, of course, to Real Estate Institute and to realestate.co.nz for the data which I use for this. Big thanks to you also for checking in. Well done, you made it to the end. If you want individualised advice, please reach out. It's Adam here at Low & Co. Thanks, and see you next time.